Today I want to introduce a very special consultant. So Tej was referred to one of my biggest investors. He was his nephew. And typically I personally don't prefer referrals. I like, because most of the consultants in my office are people that I've known for the last 10, 15 years, But when I met Tej, he comes from he's an engineer himself. He comes from a very strong investor family background, very strong network. But I loved the way his focus, dedication, how smart he was just in general. He really understands data, really understands numbers. And today's video is going to be an example of that. I'm really excited to learn myself. He's made such a detailed report. So here, both of us are learning together from Tej. So Tej, I'm handing over the stage to you. I'm going to sit and I'm going to enjoy and I'm going to ask you a lot of questions in between. Okay, so it's going to be an interactive session.
Yeah. So apparently it's out. I'm a Nepo baby. But I think I'll be able to perform as a wonder kid if I show you what this whole video is about. So before getting into the numbers, before getting into the reality of the situation about what has happened to Dubai, I want to share a few questions that my investors had. Starting in Feb 2026, the global media wrote a different story for the entire Dubai's real estate market. Now, what happened was the questions circulated around: is the Dubai market finished? Dubai market has fallen by 50%. Can I invest in Dubai? So my questions as a consultant to my clients were, I was actually concerned about their issues. So at first I acknowledged them. It seemed like they were hesitant to the market. It seemed like they were scared to enter the market. Now, coming back to the market, what happened during this whole war situation? In late Feb 2026, when the geopolitical conflict started, Iran was attacked by Israel. We all know the details. What happened in the Dubai real estate market was sales had dropped by a lot. So in January, there was a total sale of 65 billion. If we talk about February, the sale reached 72 billion. In March, right after the conflict, the sales dropped at 35 billion. If you take these numbers in a particular order, what happened was the whole scenario about investors being scared, investors thinking, should I really invest in a situation where geopolitical tensions are at such an high? We'll explain to you how it all happened. Now, getting more into the numbers, the value strat index dropped at 5.9%, first of a kind drop right after post pandemic. What happens through all these numbers is we have to connect it like a spider web. Each and every number tells you a story. When the value strat index dropped, the investors had a mentality of wait and see. Now, what does this mentality mean is exactly they wanted to see how the market will perform. Coming down to late March, Pakistan with 4 other nations announced the peace treaties. Treaties were in progress. Each and every investor saw a hope of light in which the market could perform again. May recorded the highest transactions of this year for 69.5 billion. Now, this number tells you something like how fast is the Dubai market to respond back or to bounce back from its delays. These all numbers tell you a story: how many sales transactions have hit the market, how many sales volume has hit the market. But we'll get more into depth about what is the investor's mentality, where you can find bulletproof investments in which have also performed even during the war.
So what is very interesting about Tej is that, see, why I did mention about having an investor family background is that, see, when let's say a regular broker goes back home, he's sitting amongst brokers, right? It's a different mindset. It's very important to understand this. When Tej goes back home, he's sitting amongst investors. It's a whole different level of conversation. So you will find that temperament in Tej's conversation as well. So please hang on. These numbers are phenomenal.
So as I've explained what the investor mentality was, it was of a wait and see mentality. The whole situation changed from speculative to research driven. Now, before coming to Zohaib's firm, I gave interviews at a ton of other firms as well. But as my uncle recommended that you should just go and see how Zohaib works around this. I know Zohaib has a lot of fintech investors, so I'll explain his firm just with an example. What his firm has done is not in terms of sales volume. They think about clients. Now, what clients get are returns. To be put in a simple line, Zohaib is what is called the medallion fund of the hedge funds. It has performed the highest in terms of sales growth and sales volume as to returns towards their clients. Now, coming towards our initial topic, how you can find bulletproof investments in today's war-like scenario that have even grown on sales MOM. If we talk further, we'll talk about developer pedigree. Each and every consultant out there tells you to invest in a government-backed developer. Each and every government developer acts like a safety net that your investment won't fail. But what if I told you guys that even government developers have failed to perform in this war-like scenario? Going further, we will talk about bulletproof sanctuaries which have performed even during the war. Could be government developers as well as non-government developers. Also, we will talk about distress opportunities that are existing right with us. The idea behind this particular slide is discussing the developer pedigree. Now, what happens is our safety net with government-backed developers like Emaar, like Nakheel, is that if we put a hard-earned money in, it won't fail. But that isn't true. Certain investments, certain projects from government-backed developers, I haven't compared them over here, but what I have done is I have told that two different projects from the same exact developer, one has performed in the market and the other one has not. Now, getting into depth, why has the project from the same developer performed and which one hasn't? If we talk about Emaar, we will talk about Dubai Hills Estate. Dubai Hills Estate is one of the most prominent projects by Emaar, which is currently under progress. Now, what I mean by currently under progress is they have an active supply pipeline. What does this do? When you have an active supply pipeline, your community hasn't been completely built. You have two types of transactions going on in that same community. You have OCUDs being registered for new off-plan projects, and then you have title deeds which are coming from the resale market. Now, these particular numbers tell you a different story. Today, we are talking about the secondary market and the distress section out of it. What has happened between two different projects from the same developer? We'll be talking about Meadows. Meadows is a completely built community. It is an HNI community, however you might deem it. What happened was this whole community, it doesn't even have a single plot, which is yet to be put in the future pipeline. So when a community has been completely built, it has received its entire appreciation. But what happens when it has received its entire appreciation? Will it grow further or will it not? That is the question of investors. I am talking about having a certain bulletproof vest. There are two types of investors, some who are risk prone, some investors who want to go risk free. When we talk about a risk free investment, we talk about an investment in which we can take a bull run according to government invested projects. But during the conflict, during the war scenario, you can't bet on government backed projects just on basis of their intermediate pipeline. Now, what will happen if you bet on certain projects? Yes, you will receive a less sales price, but what will happen is the rentals, the returns that you're going to get are going to be delayed over time until the solution from the war or the peace treaty of the war is not completely done. Now, talking about the geopolitical sentiment shock, we are talking about expanding master plans and matured communities. The same difference we are going to talk about over here. There was a month-on-month price correction in Nadal Shiba of minus 14%. The property in Nadal Shiba dropped, and it is a local. I am talking about Nadal Shiba Gardens and Nadal Shiba itself. So when myself, my uncle lives in Nadal Shiba. I used to live in Nadal Shiba as well. I recently moved towards Dubai Silicon Oasis. Now, when you hear such a sentiment shock of 14% drop in a particular property, you think the market is falling, but it gives you two different opportunities. It depends on your kind of investor. You might be a risk prone investor who wants to invest in Nadal Shiba. The Golden Metro is coming right next to it. You're entering at a very mediated price. You find a distress deal, let's say below 10% on the market. You get a distress yield discount of 6.4%. What these numbers create around an investor mentality is that you can flip that particular property of, let's say, holding it for 2 years rather than investing on a 4-year timeline like an off-plan project. Certain people, they were investors with me who said, I want to invest in the Dubai real estate market right now, but the thing that's stopping me is the peace treaty that is being signed by both the governments. Now, what happens in certain scenarios is, if you give these kinds of investors a particular bulletproof deal that is going to grow every single time, you go for matured communities, you go for meadows, you go for Jumeirah Islands, communities from same developers but which have performed and are completely built around.
This is brilliant. Okay. So I guess yesterday I was discussing with an investor from the UK, originally from Bangladesh, and he has like a 50 million portfolio, more than 50 million actually. I'm going to discuss that in detail after this video, but see, I love the fact how he's discussed it, because a lot of people, so that portfolio is it's a very diverse portfolio. Like, he's got like 7 mix of studios and 1 beds in JVC. What are the pros and cons? How did the rental market impact him? Like, and funny situations, like, for example, his ROI is fantastic, but the tenant started complaining that you need to change to 12 checks. And then he's struggling to get all those monthly payments. And because of that headache, he wants to exit it. But at the same time, the properties that he had in mature communities were performing really well. I mean, he didn't have any complaints, any issues. So he wanted to change his portfolio from bulk 1 bed. So we're going to sell those portfolios and just reinvest into mature communities, because these did not face a lot of divergence. These are actual digits. But now if we go to communities where there's a larger supply of smaller units,
right,
or maybe communities that were focusing majorly on Airbnb, short-term rentals, even that you'll find differentiating numbers depending on the market.
Right, yeah, that's true. So each and every community has its own risks and its own advantages. You might get a bulletproof investment, but will it grow exponentially in time? That might be true or might not be true. So if we talk about communities like Nadal Sheba, which have fallen over 14% in sales. So Nadal Sheba, when I talk about Nadal Sheba, it is a combination of Nadal Sheba Gardens and Nadal Sheba, which is local only.
That's so, GCC. And then see, Nadal Sheba, I think this is a little very different. I'll tell you why.
Yeah.
Nadal Sheba has these independent plots that were constructed.
Right.
They have that old GCC owned Nadal Sheba.
Right.
Those pink ones.
Right
in front of the mall.
Right.
Phenomenal location, but very old.
Yeah.
Beautiful floor plans, but very old.
Right. I know. I used to rent in them only.
So that's another thing we'll be making. I did a serious house hunt and we bought something, and I will tell that. So that's a secret later. I'm going to launch it in August. But I saw this house. It was so old. I saw big cockroaches as well. So that's why, but the location, I'm standing in the house corner, 5 bed, upgraded, and front of me was Nadal Sheba Mall. So I love that. So what we're talking about is also, there were a lot of independent plots. So a lot of agents sold, because land is a weakness of especially Indian investors.
Right.
Big
That's
weakness.
True.
You tell an Indian investor land, he's ready to buy.
You might remember about Decca. They launched some plots like way south,
in like far across, near the moon,
and still they were sold out
in the name of land.
Exactly.
Right? So land is a weakness, especially Asian investors. You tell them land, because in places like Singapore, it's really hard to acquire land. You cannot, right? So if they can say land. So over there, a lot of agents said, hey, Nadal Sheba Gardens is coming. So there is land right next to it. When that community is ready, these will increase in value.
Exactly.
But they're not linked.
That's
because
true.
At the end of the day, so the community developed by Miras is performing well. But because of the neighboring areas of this, that is why in average the rates have gone down. So Nadal Sheba is a very different.
Exactly.
Yeah.
So what happened over there as well is the pipeline for Nadal Sheba Gardens is very huge compared to Nadal Sheba 1, 2, 3, 4. And those independent plots which are still over there bought by customers haven't been, built upon.
Yeah.
So that creates additional supply.
Oh, that's actually a very important point that Tej mentioned. Now, if you look at all of these, okay, Palm Jumeirah, Victory Heights, JVC Villas, Meadows, Emirates Hills, Jumeirah Island, Springs, Tilal Al Gaf, Dubai, River Ranches to Furjan. The difference between all of the Nadal Sheba Gardens is that all of these are mature communities, nothing left to sell. It's fully sold out, right? Now, Nadal Sheba, let's say Nadal Sheba Gardens is comparable to, let's say, in that lane, Dubai Lane Road, it's comparable to Shobha Elwood, Valley. To a certain extent, Arabian Ranches 3, certain extent, anything else on that road. But so you'll find similar numbers maybe in Valley as well.
Right.
Because people who wanted to sell at close to 50-60% ROI got stressed, didn't want to invest more to the market and selling at minimum premiums. So recently also we had a transaction, Alana, the guy bought it around 4.8, 4.9, he sold it at 5.4. But technically, if he held on, this is a product that would have easily gone to a 6 to 7 million mark. So the new investor who wants to live in himself understand the value proposition.
Exactly.
So we can find these in expanding communities. This is a beautiful, this is the key, this is very interesting. I love this.
Right. So that is the point. So Zohaib told people who invested in Valley were looking for 50-60% gains. That is because the consultants probably guide them in a particular way.
Yeah.
It's like the horses wearing a hinding eyesight, and they tell that it will grow 2 years down the lane. Now, what happens in certain scenarios is a customer builds a particular repo that I invest, say, 2 million, 3 million in Emaar. It's going to grow 2x in 2 years. That breed of consultants is actually wrong.
That's the problem that affects the market.
Yeah, that's true.
So in this 50 million portfolio that I'm going to discuss next from this guy from the UK, someone convinced his father to pick up 4 plots in Ajman. But because he said land, he picked up land. And now the son and the father are competition. The son has a portfolio in Dubai. So the worst thing, okay, I'll explain now. This is a beautiful portfolio to understand. He bought a Sidra at around 4.8. He sold the Sidra for 9.6. Okay. He invested that 9.6 into this diversified portfolio, mix of JVCs. And then that was the biggest regret of his life, to listen to the wrong consultant. And he started off with a bang.
Right.
And then he went into the residences, JVC.
Right.
He bought Bliss in Arabian Ranches 3.
Exactly.
Resale market at 3.7 or something. Peak of the market, because he didn't understand what is the built-up area, what is the plot, what is the exit buyer. He didn't understand the whole process.
This is the exact problem of consultants, like what they guide them you towards. So what I wanted to talk about initially was every single consultant during the war period didn't have any data to rely on. So he was doing anything that was like, he was believing any hearsay which was told to him. So I am talking about different communities which align towards your investment portfolio. If you want a capital appreciation portfolio, you can probably go to Naval Shiva because it has fallen in value a lot over time. But what you're going to invest in is the golden metro line coming in 2033. And what is that going to do? That is going to give your entire community connections towards, let's say, DIFC. It's going to give you connection towards every economic hotspot that is out there. So it is about how you want to invest and what you want.
No, see, again, to all the investors who are watching out there, okay, trick question. Where would you buy? With this number or this number? Now, I would buy at this number. Now, this is what you'll have to understand. Because why? At the end of the day, I know that this area, I understand the location, right? Right in front of this Naval Shiva Mall. It's a phenomenal location. It's very close to downtown, 15 minutes. Because of it's an expanding community, the people who are sold the wrong way, who are sold as speculators, are now in stress and they're selling it at OP. So I'm getting an opportunity to go back in time and get it at that original price.
Right.
But this is a mature community. There's limited growth because there's opportunity, and see the new.
What it means is room for growth.
Yes.
You have to see how much room for growth is there. Okay, Palm Jumeirah Fronds has grown by 6.72%, but you have to understand there are a very limited plots over there. So the room for growth over there compared to Naval Shiva would be less and high. It all depends.
So 6.72, right? It's
Yeah.
also over time.
Exactly.
Imagine how old these communities are, the top 6-7 communities.
Right.
Old communities, right? And over time, how much they have grown in terms of the asset value.
So the most of these communities, like downtown, has reached a ceiling. So your consultant should be able to assess what is the ceiling of a certain community and which expanding community do I have room for growth based on the market supply.
Right.
Means now if I give you, let's take Arabian Ranches 3 as an example. Okay. What does it start with? Sun, Joy, Ruba, Bliss. Okay, let's take these 4 clusters as an example.
Right.
On an average, the built-up area is around 1,000 into 2,000 square foot, and the plot sizes vary from 1,200 to 1,500 square foot. Okay, I'm giving an example. This is something people don't like. They've started rejecting these smaller floor plans because people want a plot, and people who started changing, who's the market pioneer? Emaar. Emaar started changing in Valley Phase 2, started giving bigger size plots and bigger size built up area. To a certain extent, even Demac did a pretty decent job with Demac Island because 2,600 square foot plot. They at least broke that parameter.
Right.
So this is where we'll have to assess, okay, what is the buyer looking for? Okay, he's looking for community, he's looking for lifestyle, he's looking for a bigger plot size, and of course at best value. So this is what we'll have to determine.
Because every type of investor is going to have an end user in the end.
Correct.
So that end user, what he wants, what is his profile, where does he want it, is the most important question, and that is how we have to guide you towards it.
Now, I'll tell you why Jumeirah Islands is performing. This will be a detailed home tour of mine as well. I'll conduct that home tour and I'll explain why I chose the house that I chose. So, for example, I went to Kaya and Elisab. Now, they're so extremely portrayed as high-end communities. But then the thing is, I entered. So, this is how I enter Arabian Ranches 3. I turn to the right. Maybe I drive 2 minutes. The community is done. I turn to the left. I drive 2 minutes. The community is done. Right in front of the roundabout is Kaya, and right next to it is Elisab. Now, if I go into the community starts and ends very quickly. If I'm in the community, the street is so narrow. Now, I don't know how to call this. The frontage area, okay? Now, if your cars are parked, 2 other cars cannot park. It's very limited. From the road, I straight step into my house. Now, a UHNI investor does not like this. Now, Jumeirah Islands, I'm giving an example. You enter massive communities, huge roads, huge spaces. You're driving, it feels different. Like Dubai Hills, like Meadows, like
But it
Springs.
comes at a price.
It comes at a price, agreed. But people are willing to pay the price.
Exactly.
In Dubai, it's a whole different culture. People want that lifestyle. So you're entering over there. Now you enter a cluster. Again, maybe what, 10 villas in a cluster. Now you enter, there's a beautiful frontage area, you know? It's beautiful. You park your cars, you enter in. Now, this average price of 25 million because now most of the villas in Jumeirah Islands are being upgraded. The rentals are insane. This number that I'm talking about is around 1.5 million dirham mark as a rental, and people are willing to pay. This is what most of the people of the West or Asia do not understand, the mentality of Dubai. In Dubai, you are not attracting blue collar or immigrants who are looking for that initial job, or people are not coming from universities working on student visas. No, over here, what do people come from? Dubai is like the best luxury retail experience. People coming for shopping, lifestyle, safety, low taxes, business culture. That's the kind of entrepreneurs are coming out to this place. They don't mind playing, because when they pay 1.5 million, they're networking with people who are centimillionaires, and through that network they're going to expand their business. That's the whole culture of Dubai, you know. So it's a whole different mind
the
game.
buyer sentiment is totally different. So 2 types of different buyers, both are UHNI projects,
Correct.
HNI projects.
Correct.
But one has performed, one isn't performed, but you still have a chance to make money. How would you make money? Now, I'll talk about an investor I had 2 months back. What happened was, right after the war, we got him a distress deal in Nakheel Shiba Gardens. It was mine at, what is a distress deal for me? Anything below market price is a distress deal for me. I am not talking about anything below OP. Again, I am talking about anything below market price.
Very important, because most investors, let's say from Singapore, from US, for them, it's 20 to 30% below OP. Right. In Dubai, I'm not saying they're not, because yesterday one of my buyers did pick up something below OP in Naya district so one-off cases. But in these mature communities that he mentioned, all the mature, you're not going to get a below OP deal.
Right.
You won't. You might get a below market price, but you won't get,
So for that, what we did was, how did we leverage his payment? So the seller actually had paid 25%. He couldn't get more installments done. We've got 8% below the market price. A deal that is 8% below market price for a segment of 14-15 million is a big thing. Now, what do we do after that? We leverage his payments, we finance towards it. Second growth towards this aspect is going to come when the community is fully developed. Now, Nakheel Shiba Gardens has a lot of plots that are still over there. What people are doing right now are buying those plots and holding on to them. But you have to understand the dynamic of people who are coming into Dubai. It is a family-centric dynamic. Now, what happens is, when these families comes in, they are not going to go towards apartment. Even if they're going to go towards apartment, it's going to be 2 or 3 bedrooms. But when I am talking about Nakheel Shiba Gardens, I'm talking about a different buyer-specific mindset, which has 15 to 20 million in his pocket and is looking for a deal which is 5 million below the market price. What do you think about that particular deal? You're entering at a segment 5 million below the market. Second, you're going to see another growth of 15 to 20% if your plot is right next to the metro station. Now, that kind of mindset is what we have to tell our viewers about.
See, now another thing I want to explain. See, now I like the concept of leveraged off plan, right? Now, one of the biggest concerns of a lot of investors were like, hey, you know what? So many cash transactions in Dubai, because that's not common in the West. But that's one of the biggest safety nets for you as an investor. Right now, there's a 2.8 trillion crash in the commercial real estate market in the US, because all of them were levered buyers when in 2020, when the interest rates were on 2.7, they entered the market. And now, when the interest rates are going to hit towards 8% and they're refinancing, it's going to come, the payments are going to get due in 25, 26. Most of them are going to go below OP, because it's very common in the West to have levered buyers, right?
Exactly.
Now, here, because it's a mix of levered and unlevered buyers, that's what's going to hold it. Why do you think there are no below OP deals?
Exactly.
Because the market stays strong.
Exactly.
Which I want to just one last thing. If you want plots, we've got some very interesting land opportunities on Sheikh Zayed Road. Okay, so extremely prime land. So anyone who is interested in land, well, that's a fantastic opportunity. And no, it's not in Ajman.
I'm going to open a graph so we can explain a bit more about sales.
Okay. No, I'm not saying Ajman is bad though. Also, okay. every opportunity is different. And see, I recently met an investor who said that I don't want to buy into villas and townhouses. He bought all these apartments near downtown and on Sheikh Zayed Road because he thought, who's going to live in these suburbs? But then when I explained the numbers to him, he was shocked. So it's really important. This assessment is really important. Yeah.
So when in the starting of the video, I was talking about sales volume and number of sales. So the difference between the two was I wanted to link it with what was happening this year, pre and post war. What happened was in Jan 2026, the numbers for Okuds flied over. The ratio for Okuds as to title deeds was 4:1. Now that big of a ratio, but if you talk about coming in March or April or May, you see the ratio has completely changed. It has come close to 1:1 or 1:2. Now, what do these numbers tell you? The title deeds have stayed stabilized from December last year till May this year. This number tells you the stability of the secondary market. Anything that is coming into resale, the volume for resale has stayed the same. Now, you look at this graph. Do you see a lot of volatility over here? There hasn't been any volatility while people say that the market is finished. It is been finished because of the buyer sentiment of waiting and seeing. Now, waiting and seeing, as Zohaib said, there are a lot of leveraged buyers over here. They usually go for off-plan deals, hence the number of Okuds were higher. But what happened during the war is that they saw a consistent graph of secondary market sales. Developers like Emaar, like Nakheel paused on their projects. Why? Because they want to safeguard their older investors' deals or projects which were already in the market.
Yeah, so that's the strongest point. It's because we have a mix of levered and non-levered buyers, and our cash buyers or the UHNIs, they're not moving anywhere, because once you live in a place like Dubai, it's really hard to settle anywhere else.
So in this slide, we are going to explain how you can find a distressed deal that is perfect according to the market conditions. So basically, there are three different formulas. To explain them in layman terms is, so your rentals that you will be getting from your property each month is going to be calculated by this. When I talk about rentals, it's going to be your annual rental, which is going to be divided by your purchase price, and in turn it will be multiplied by 100. That is going to be your yield. So your yield, which we'll further use in distressed purchase price. Now, what do you mean by distressed purchase price? It is basically how much below the market have you gone to purchase your property. Let's say your property was priced at 10 million and you get a distressed deal of 10% below the market price. That is going to be your distressed purchase price, which is further used in yield expansion. Now, what yield expansion, this used to be my favorite formula from our maths class back in engineering. What happens in yield expansion is you can calculate which deal is right according to the market, in which you can make a profit even in today's market. So what I mean by these words is, you purchase a deal, let's say at X, and the market price is, let's say, Y is greater than X. Now what happens is, you purchased it at Y, now it is greater than X. Now what happens is this difference which we are going to calculate, triangle means difference, and this difference which we are going to calculate, that is going to be the greater part of y, is going to be, it depends on your positive or negative section. So let's just say if this difference is positive, that means y is greater than x. Now what happens in certain scenarios is, so to explain a yield expansion, we'll have to calculate the yield of distress price. Now what happens is, let's say you've bought a property at x and the market price is y. If y is greater than x, that means your difference comes out to be positive. Now what does this tell you is that you've got a good deal below the market price, and this is what we are going to use further down the lane. We are going to calculate the yield distress. So yield distress is calculated by what is the yield of the market, that is your ROI, which is going to be divided by your discount in layman terms. And around this whole scenario, there are some key insights that you have to keep in mind. What happens is, Dubai's property market is a cash buyer influenced market. 80%, 87% of buyers right now in the market are cash influenced. Now what does this create? This creates easy liquidable options. Why is the market cash influence? Is because people during war tend to hold on to their assets. When they wait and see, they've got a lot of disposable cash in their accounts which they want to invest. Hence, these cash deposits are going to create investment opportunities into the market. People prefer to go towards the secondary side of things because it has remained stable, and you can invest in a property which you can see right in front of you. Now we are going to talk about the forecast, or what the market is going to be like in June and July. So you have to create a pipeline in which you want to invest. When you want to invest, you need to know which products are in the market, which investments to look into, which areas to look into. So to create that report, I have forecasted what the market is going to be like. For that, I'm going to give you two important values before I present this. Two important values are the market in February as compared to the market in April had a huge difference just because of one single point. That single point was Pakistan with 4 other nations announced that they were currently in progress of the peace treaty talks. Now, what this created was a ray of hope for investors. Consider yourself in a dark room. When you see one single ray of hope, you're going to grab it. That is what happened in the change of sales price from February to April.
So what is interesting about this is that I think between, like he rightly mentioned, between Feb and April, there were several times that Trump, explained that this was ceasefire, then it not. So there were a lot of back and forth, right? And based on which the stocks were going up and down as well. Now, apart from stocks, even in real estate, because I think this is a very positive indicator that people know that the Dubai market will always find its way. Right? Because we've been studying this market for the last 20 years. So every time we assess that, okay, now everyone is going to be signed. They've got 4 to 6 months. October, November is our target date. The second they saw a bleak of hope, boom, everyone started going and started investing again. And again, when there's uncertainty, like recently what happened in Kuwait, with that,
Correct.
again, people started holding back, hold cash. And the second, okay, they're deploying it back again, So that back and forth is what we're trying to explain.
So what you have to keep in mind is
your fundamentals. These are your fundamentals. You never budge from your fundamentals because, see, I understand that most people are emotional buyers. At this stage, has to be purely data oriented.
right. When that ray of hope came into the market, you don't have to take it lightly. That ray of hope will come again. Dubai always bounces back. That is what we've learned post-pandemic as well. The market did fall at that time, but we saw one of the greatest peaks in real estate history right after.
Because our fundamentals are extremely strong. Now, for example, even if you assess, let's say, US market, UK market, European market. Now, who are the strongest buyers over here? Okay. The number one, the strongest ethnicity in US are Indians. Now, Indians population itself is 5.4 million in India. Now, every single Indian in the US, because of the current geopolitical situation, I'm not talking only about US, because forget about all the countries I mentioned. Everyone's looking at as some sort of plan B or a retirement destination, some sort of a portfolio in Dubai. So even if I take a fraction of that, because my supply is at around 100, 200,000 per year. My 2033 is, we are expecting a population of currently around 4.1 million towards a 5.5 million.
Yeah.
5.5 to 5.7 million.
Yeah.
1 million people, it's extremely easy to cover that supply demand is taken care of. In fact, the demand is a lot higher, close to 50% higher to the anticipated supply.
And it serves as a bane as well. What happens is when the developers actually paused on their projects, what did they do? They safeguarded their investors' interest. Yeah.
So all of this is going to hit back. See, when Emaar held, and Emaar is your major market shareholder, Emaar, Nakheel, Miras, they all held. The price didn't budge one dirham. And so, no, there is no deal waivers, no discounts, nothing. They said, hey, you know what? The best we can do is maybe you can work on a payment plan, but nothing else works because we need to protect our investors. And that message is going to spread throughout.